all that and more with Rahul Sharma, who's joining us on the show. Rahul, it's a day of the weekly options expiry for at least the Nifty now, and it seems like it's likely to be a bit more on the positive side because last 2-3 days was all about profit booking, consolidation.
Yeah, very good afternoon. We've seen a dip at the beginning of the year, and now I think Nifty is ready to propel towards the 22,000 mark. Now, we strongly feel that there is a strong chance of a suckers rally, having or coming into play over here, which means that we may be very well towards the end of this mega up move that we've seen in the last couple of months. Now, what that translates into actionable is, we can continue to party, but stay close to the door, stay close to the exit, because once the proper correction starts, we could very well see deeper cuts in especially in the mid and small cap space, where we've seen a lot of high magnitude action in the last few weeks. So it's better to be cautious. In fact, take some money off the table, book profits, be very selective in terms of the sectors and stocks that we pick. And speaking of sectors, there are two sectors which clearly are looking very good and are on our buying list. So the first one is chemicals. This sector continues to still look good in spite of the recent move that we've seen in the chemical names. We feel there is more upside to it given the last 2 weeks of 2 years of underperformance that this sector has exhibited. So a lot of catch up being played over here. The second sector which looks good is the IT space. Now, IT has taken a beating over the last few sessions, but we feel another 2-3% more on the index, IT index. It would again come into the buying zone where risk rewards become favorable again. So these are the two sectors where we are looking to cherry pick and buy stocks on the long side. And there is a bit of pharma also coming into play, where we are seeing selective buying happening in the pharma space as well. So defensives are the ones to go for. As far as Nifty is concerned, the best thing to do is have a trailing stop loss for your long positions at 21,485. And as we move towards 22,000, keep on taking profits and sit relatively light as compared to what we have been trading in terms of the last few weeks.
Point taken. So that's a call coming in on sectors. It's IT and chemicals, the underperformers which are likely to do well. And of course, the trades on the Nifty and Bank Nifty. But Rahul, what should one do about the rally in real estate? Completely book profits?
Yeah, so reality, in the last couple of months has given a decadal breakout, and decadal breakouts generally play out for at least a couple of years. So I'm very bullish on the real estate pack from a 2-year perspective. In fact, last year, 12 months back, it was public sector enterprises which hogged the limelight, and that sector saw a decadal breakout. We've seen 12 months of supernormal performance in this sector. Something similar is happening in the realty space as well. We feel there is more upside to this sector. The large caps have done their bit. We have had DLF as our Diwali pick. The stock is already up like 44% in a matter of 2 months. So now is the time for tier 2 and tier 3 to participate. So the entire sector looks good. If there are meaningful corrections, they would be good levels. I mean, it's a buy on dip sector for sure. And it is one sector which has got long legs on the upside. So stocks like something like an India Bull Real Estate has not moved. We are bullish on that one. Something like Rustam G, which is relatively better placed as far as technicals are concerned, we're bullish on that. And to name a small cap stock, which is not really small cap now, DB Reality, that stock looks good to us as well. So we are focusing more on the tier 2, tier 3 names, mid and small caps, where we see this rub-off can come into play once the large cap rally is done.
Point taken. So that's a take coming in on the real estate pack. If there is any correction, try and probably look for the opportunity to buy into some of those names. But the other space I wanted to discuss with you is the public sector entities, Rahul. I know there's wide variety within that itself, but anything that stands out to you as a big buy or even a big sell because of the run-up?
Yeah, so we are advising our clients to take profits in the public sector enterprise space. PSE, like you said, it's a very diverse one. So wherever we've seen good returns in the last three odd months, it is prudent to take money off the table and probably wait for a dip to re-enter. Something like an NTPC is up by 40%. Something like the power finance companies have doing extremely well. So at the staggered, one can look to take profits from there. But one theme which still looks pretty solid to us is the power theme. So power stocks have been doing very well. In fact, it's not a PSU stock, but Tata Power is our topic in today's trade. One can look to buy Tata Power at these levels. We feel that 10% up move can be possible from these levels. So something around 365, 370 is what one can expect on the upside. Can be bought for a trading bet at these levels. Stop loss placed at 319. And apart from these sectors, power is something that we feel that whether it is a PSU or a private, I think there is more upside to be had in this space.
The topic from power, but you suggest us a topic within chemicals as well, because I think you like SRF, right?
Yes, so last time we spoke on your show, it was Deepak Nitrate was our topic. The stock is already doing well. Now the next stock in line to give a breakout is SRF. We feel that this is one stock where one can have a quick move of around 8 to 10%, but structurally speaking, there is more upside to this stock. So for a trading bet, one can look to buy for a target of 2650, have a stop loss placed at 2424. And we feel like, chemicals, especially given the multi-month underperformance now seems to have reversed, and this is where alpha generation can happen over the next few weeks and months.
The alpha generation happens or not in chemicals, but Rahul, we let you go. Appreciate you joining us on the show. But